Hello, good morning. My name is Hielkema, finance reporter for Politico in London. Welcome to this virtual panel discussion on green finance. I'm not sure if our participants have joined yet. Yes, they have. Hello. Thanks for joining us. It's a very quick panel, so we don't have a lot of time to debate. So I'm just going to go straight into it. I would like to pose a question just off the recent news, which is the massive increase in global energy prices, gas prices, and so forth. And I just wonder if our panelists could say from where they're sitting in their jobs, whether this increase in prices is interpreted as an opportunity for the green industry and green policy, or a threat, because I've read mixed reviews on that. So let's start with that, and thank you.
Shall I start?
Yes. Oh, sorry. Yes, please.
Okay. Despite what we hear today, the best way to mitigate energy prices is actually to speed up the transition towards a clean energy power-based electricity system. I think it has made it clear by Isabel Schnabel and also Fatih Birol. The executive director of the IEA said that it's not a renewable or a clean energy crisis. It's clearly a natural gas market crisis, and inflation today is driven by high gas prices and volatile fossil fuel price. So the best solution to actually look at now would be to increase investment into clean energy and clean infrastructures. The investment today are at 1 trillion a year, and they should achieve at least 3 trillion a year to replace fossil fuel supply and keep pace with growing demand, according to the IEA net zero energy roadmap.
Hugh, how do you feel about that?
Well, thanks for inviting me. I think this reminds us what a very complicated ecosystem the power energy system is. And obviously, at one level, we applaud the great work the EU is doing to shape a green agenda, but remind us that the roadmap of how we get to a greener planet is just as important, if not more so, than the end goal. Sitting in finance, I guess there's sort of three perspectives from my point of view. The first is energy affordability and energy security is central to a just transition in the West, not just in emerging markets. And so anything which derails affordable and secure energy for our societies is likely to risk the political acceptance and society's acceptance for the pace of transition. And so I think we need to be very thoughtful about ensuring that there is a base load of relatively inexpensive energy. And I think what's become very clear is some of the policies which have put our energy system together have not been helpful. So there's a rapid rethink of policies. I think particularly turning to finance, though, I think one area which through GFANZ, which is the group of 450 financial services firms who have voluntarily committed to net zero targets, we're thinking through what is the responsible retirement of fossil fuel energy. And that doesn't mean just turning it off tomorrow. That means it may well be that it's a significant period of time where we need a base load of energy. But we're trying to spend far more time to think forensically and thoughtfully about the responsible retirement of assets and ensure that there is affordable and secure energy. And the other issue, which I think is very tricky for investors, is how do you inflation-proof a portfolio? If we look through previous periods of inflation, take the 1970s, energy stocks doubled, whereas let's say the S&P or major indices fell. So I think energy has normally been the single best way to inflation-proof a portfolio. And so you can start to see the muscle memory of investors wants to invest in energy stocks because they realize this is the way through. This is probably going to be one of the biggest challenges, because the theory was that green energy would be a great investment in a more inflationary period, but actually it's proven very far from that. And you can see in the last 12 months, most of the clean energy stocks have fallen. So I think there's also going to be a challenge for investors to think about how they do the right thing for their investors through this transition. But I think, bottom line, finance is ready, willing, and able to finance a green transition. but this reminds us what a bumpy road it is likely to be towards net zero, and we need to be very thoughtful and think practically rather than just polemically about what are the right moves.
Thank you. And Petra, would you please tell us the view from a policymaker's perspective?
Yes, thank you. Good to be here this morning. I think the surge of global inflation right now caused by supply bottlenecks, but definitely also rise in energy prices and an increased demand just shows that we will be facing, I guess, a debate whether the transition to a green economy will further increase inflationary pressures. And I think that is a relevant discussion which we need to get into. From a policy perspective, from a supervisory perspective, I think first of all, indeed, there's a need to monitor inflation, but at the same time, I think, and the impact thereof, and indeed some of the challenges also posed by how then to manage your portfolio. Having said that, we need to remember that we are in it's an uncomfortable position, but we are in a place between a rock and a hard place with limited availability yet of renewable energy opportunities. And so also there could be inflationary risk if the demand goes up on that end quicker than the supply can do. So let's remember why we are in that position. We're trying to get out. We're trying to get to a better place. So I think indeed, while consciously and also looking at what that means in practice on the transition, but keep moving as a supervisor, we'll closely monitor the impact of inflation, but also the continuous effort to indeed keep making move towards a more sustainable economy, because that is in the end where we want to end up.
All right, thank you. I'm going to move to the next big question I had, which is about the globalization of ESG policies and green regulations. And I just wonder, do our participants feel that the EU taxonomy is succeeding at influencing global policy making, and if not, why not? And Petra, I would like you to start, please, because you are you are part of the policy making establishment. Thank you.
Yes, thank you very much. Indeed, we also follow the discussions very carefully. We do not make the taxonomy ourselves. But what we do feel is that it's very important to have a coherent approach in the identification in general of what is sustainable. And we do that. We need to reduce the complexity and the compliance cost of reporting on that. We need to reflect the global nature and reduce hurdles. And so I think clearly already within the EU, we have the issue of the financials already needing to report on sustainable activity, while the non-financial reporting directive is still under development. Now, when we look at the taxonomy and I think here coherent will be much more likely than identical going forward. For taxonomies also reflect existing or current regional and local specificities, including energy supply or differences in an economic activity. And I think that is shown. However, I do feel that through all the international platforms that policymakers, but also supervisors, regulators are in, we try to inform ourselves of what is happening elsewhere, and we also actually use that knowledge to move ourselves further. And I think here the EU is very much helpful, I think, in continuing a very thorough thought process and continuing the pace of the needs to have regulation in, to have a taxonomy, and showing that will bring it further. But again, that doesn't necessarily mean that it will be exactly copied. But coherent is very important, and learning from each other, including other jurisdictions, but also sharing what we have will be key in order to make sure that we might not move identically, but at least coherently in towards the same direction.
Thank you. And Lucie, what do you have to say on this from the advocacy sector, I suppose?
I say obviously that the EU Commission failed to do a science-based taxonomy, so it's now up to investors to make sure that the market products, when labeled as sustainable or green without gas and nuclear. I think the Commission made a big mistake and is actually putting shame on the EU. The EU is supposedly leading on climate finance, but today we are going to have a taxonomy which is less ambitious than the Russian taxonomy. Russia is the second biggest gas producer worldwide, but they don't put gas in their taxonomy. So we hope that investors, and in particular the many investors that individually or collectively through investors coalitions such as IIGCC call the commissions to make a taxonomy without gas and nuclear, we hope that these investors will maintain their position, and if they are serious about climate, they will market their own green and sustainable products without both gas and nuclear. We need to remind that the EU won't meet its climate targets without moving to a clean energy electricity system by 2035, and the building of new gas plants will be inconsistent with meeting these targets.
Right. Not music for the Commission's ears, I would imagine. And here, what are you telling investors about all of this?
Well, so we obviously try to live with the world as it is as well. So first, I think that the EU has had an incredible positive impact on the global attention on net zero and the green transition. However, I don't see the EU taxonomy going global. But that's maybe not the end of the world. So I think first, there are a number of initiatives from Europe which really are having global impact. And I think whether it's about disclosures, whether it's about taxonomies, it's also about stress tests. So Frank earlier on talked about green stress tests or scenario exercises. 4 years ago, I was working with Governor Mark Carney on designing the UK's first green stress test, the world's first one by a central bank on a TCFD basis. 38 central banks are now copying that idea. And of course, they are having their own local interpretations. But broadly speaking, the concept and the high-level principles are now being used globally, with the Fed looking to incorporate this in the coming years too. So I think it's acceptable to say, as long as the key principles are there, if the exact way that the recipe is used locally may not be the end of the world. But maybe specifically coming to EU taxonomy, I almost think that there are three different issues here which investors and stakeholders and corporates are worrying about. There's the core data sets. Do we have disclosure and radical transparency about carbon emissions so we can better judge the decarbonisation journey of companies? Second, what is the framework which we, each and every investor or country or a company thinks about for the green transition? And then thirdly, where people are greenwashing or simply lying, how do we prosecute that malfeasance? Where I think there's a positive is on the data, there is growing global commonality. And I think the initiative at COP26 around the ISSB, the International Sustainable Standards Board, I think is incredibly positive that at least we're going to get much more radical transparency of the data. And then each and every one of us can make our own decisions. If the better we get the data, actually, to be honest, the less relevant the taxonomy is, because it's going to be much clearer to investors how to navigate. But in terms of the taxonomy itself, I think it was a very good effort, but I fear it is quite complicated. I mean, and obviously, as Lucie said, there obviously, every framework has political compromises. So I don't see the taxonomy going global, but I don't think actually from an investor and market point of view, that's the end of the world. Maybe as a final point, Mark Carney continues to talk about the 50 shades of green. This decarbonisation journey, as you implied with your first question, is very, very complicated. None of us have the right answer. And actually, maybe a plurality of frameworks is actually a better way to respond to what is this complicated journey to net zero. Right.
Well, thank you. Thanks for the brilliant answers you gave. I would like to drill a little bit into greenwashing. It's becoming a bigger and bigger issue, and we saw how For example, Morningstar the other day cut 1,200 funds from its green list, presumably because of concerns around greenwashing. And I just wonder, in our participants' perspective, should greenwashing be treated as a type of fraud and punished, or is it just a matter of environmental education and training and providing the right information to markets and to sellers of investments? Petra?
Yes, thanks for the question. Greenwashing is a risk that should be treated, if identified, as being very serious. And I think we already have clearly in our regulation that if you are selling products that are not offering the value that you actually are saying it has, then you're in trouble, and you should be. And we, in our regulation, we have several steps of enforcement to follow. Why is this so important? Trust reputation of the industry. So I think it's very good that on a yearly, annual, biannual basis, what is offered as a green product is being reassessed to check whether it is still green or it was green to begin with, because we do indeed have more and more knowledge on what is or what is not green. I always say that you do not necessarily have to say the product is green. I mean, you can still do it as green as you want, but the moment you are telling an investor that this is actually a green product, or for a certain percentage a green product, I think you also need to explain what is the adverse impact of the other part of the portfolio that at that moment is invested in. You need to be transparent on what it does, and you need to inform the customer about that, and that information has to be right. If you are not comfortable because you lack the data, then how can you say it's green? So I think here we need to be very strict on the need to products being sold as green actually being green, and assess that. And IOPA has been working on greenwashing, and we will continue to do so, both on a policy side, but also simply on a supervisory side.
Thank you. Hugh, how do you reassure people that the funds you're discussing with them are not suspicious of greenwashing?
So look, this again is a really quite complicated area. So first things first, sunlight is the best disinfectant. So the more data, high quality data, comparable, transparent, that we have from companies, the better able investors and regulators and society will be to hold companies accountable. So the key here is not the fund labeling, the key here is the corporate data standards. And therefore, I wish Godspeed to the work that the ISSB is doing. TCFD is an important standard. I think also in Europe, we would like to see an acceleration of the TCFD standard being implemented, because it's the corporate data which is the fundamental input into our assessment of how the world is changing. When it comes to the funds themselves, this is where it goes back to my previous answer about the data, the frameworks, and then prosecuting from selling. We can prosecute if a company has disclosed data which is not correct, but with the labeling and frameworks, it's much more tricky. So if a company, an oil and gas company, is resolutely trying to transition over the coming 2 decades and has got, as Frank was saying, has got a 5-year target, which is important. Is that a positive green journey, or would you like to exclude it because it's an energy company and therefore should be out? And I think there are different frameworks which are appropriate here. So I'm really struggling at a fund level to see how regulators will be able to prosecute thoughtfully what is green or not green at the moment, because we don't yet have the corporate data. And just to give an example, take the EU Taxonomy. As we stand today, only 2% of the revenues of the top 50 companies in Europe get counted as green under the EU Taxonomy. Well, you can't build a portfolio on 2% of the stock market. So as of today, it's not yet a sensible. It's not actually easy to make a diversified portfolio. So I think we need to work very, very fast and hard on high quality, transparent data, and then start and be a little bit more humble and almost encourage, to be honest, experimentation in the fund sector.
Understood. And Lucie, would you like to have the final word on that question?
Sure. I will build on what just said. Obviously, data is missing, and we need more data. That's for sure. And we can hope that the CSRD are gonna bring more data to financial institutions to assess how companies are transitioning or not. Unfortunately, we can also already know that the CSRD first report is not going to be coming this year, and we can expect it to be incomplete and insufficient. So, and also because the requirements are not good enough to provide all the information that are needed to for investors to assess the transition plan of the companies that they have in their portfolio. So it will be important for investors to also be vocal on the growing debate around the say on climate, how investors can require their invested company to disclose the relevant data that are needed to assess the quality of their business plan and assess to what extent they are climate proofed. Today, we are too much focused on long-term indicators, and we don't have enough information about short-term indicators and greenhouse emission reduction targets in absolute value. However, I will remind that data for the sake of data is not going to work. I'm based in Paris, and France is often known as a leading country on climate reporting. However, we are also a leading country when it comes to financing fossil fuels, with our bank making Paris the first financial system financing coal, oil, and gas since the Paris Agreement was adopted. And unfortunately, the financing to fossil fuels has been growing every year, despite the improvement of climate reporting. So data are needed, but data alone are not gonna make it. And we can already know that actually because yes, we need more data to understand the overall alignment of portfolio, but we already have a lot of data to know when a company is developing projects that are inconsistent with the Paris Agreement climate targets. The IEA has made clear that there is no room in a 1.5 trajectory for new coal projects or for new oil and gas fields. Unfortunately, today, investors are still putting money into companies that are expanding their hydrocarbon operations. So they are fueling the climate crisis when doing so, and they deliberately know it. They don't need more data for stopping doing so.
Right, again, a food for thought, more and more of that. And we only have 4 minutes left, I'm afraid. And so I would like to give you each now the chance to say what is the top policy concern you have for the near term, for the next few months. What should people be watching out for? Petra, please.
Well, very concretely, I think what is the concern, or what is at least a challenge for the market right now, is of course that the new reporting and disclosure requirements are coming in, but they're coming in different time paths. What do we do concretely about that? We are contributing to the Commission's FAQ on the taxonomy reporting in 2 batches, one this month and one was already out in December. But we will also, in the upcoming weeks, publish an updated supervisory statement in which we address some of the issues in relation to the delayed application of the RTS under the SFDR to clarify our expectations, and therefore also hopefully support the markets. Finally, and here I very much agree with the previous speaker, we really need the corporates to also start disclosing on sustainability, for that data is very important then for the financial industry to do proper reporting on green. Thank you.
Thank you, Lucie.
I would say that my main concern today is that we can hear more and more about double materiality, but we are still waiting to see where is an impact-based approach into the EU regulations. The regulation today is very much focused on mitigating the risk and not about mitigating the impacts of financial institutions on the climate. So that's one of the main concerns that we have. We really need to constrain financial services to polluting sectors and making sure that our financial institutions, when they pledge to achieve carbon neutrality by 2050, they walk the talk and they stop financing projects that don't fit into the remaining carbon budget. And the second concern that we have is the lack of regulations concerning the reliance on offsets and negative emissions technologies. We should make sure that these technologies does not allow financial institutions and companies to take actions to really reduce the greenhouse gas emissions from their activities.
Thank you. And Hugh?
So I can, if I may, give you two. So in terms of the regulatory sphere, I think it's the climate stress tests. This will be the first time for the ECB and for many other central banks around the world. And I think that it's very important that these stress tests will be a catalyst for banks, insurers, for CCPs to think about climate metrics in their risk departments, in the finance teams, but also in the way that they undertake new financings. So I think this could actually be the most pivotal. I think it also shed light that it may be the insurers, not the banks, who actually have the primary risk from climate change sitting on their books. And certainly that was what the initial Banque de France survey showed. And I think that'll shift the focus to insurers from banks for some in society. But in terms of what I'm really looking for is actually through GFANZ, 450 firms will, after 18 months after signing the commitment, have to come out with a 5-year implementation plan. Many of these will start to come out by November of this year. And I'm going to be really excited and very interested to see what do each and every one of these 450 voluntary plans mean. And I think Lucie and we all will then be able to interrogate bank by bank, insurer by insurer, what they're doing. That for me is the single most important piece of development, sadly not the regulations this year.
Understood. Well, Politico is going to keep an eye on all of these things as well. So keep reading, and thanks very much for listening, everyone. Enjoy the weekend and the rest of the conference. All the best. I'm signing off now.